ESRB warns geopolitical turbulence may test euro area banks' forex funding. Trump vows big retaliation if EU sells US assets. And Goldman Sachs raises its end 2026 gold price forecast to $5,400 per ounce. Welcome to the Economic News Bulletin. We start off with where the European Systemic Risk Board has warned that sustained geopolitical uncertainty could make it harder for Eurozone banks to secure market funding, particularly in US dollars and other foreign currencies. It noted that trade policy uncertainty was found to cut foreign currency wholesale funding issuance by about 5 percentage points. While bank bonds and covered bonds remained relatively resilient, other funding sources were more vulnerable. The board also noted that higher US policy uncertainty leads banks to tighten credit, with lending falling about 4.5% and interest rates rising roughly 90 basis points at banks most exposed to the US. In Asia, the China Film Administration has reported that China's film industry chain produced a total output of 817 billion yuan in 2025. Core film activities, including production, distribution, and screening, generated 226.6 billion yuan, while related services and equipment added 251.5 billion yuan. Viewing-related consumption and spillover effects in dining, transportation, retail, tourism, and film IP contributed 339.1 billion yuan. Experts said the sector is driving economic growth, expanding service consumption, and promoting Chinese culture globally. The Japanese Cabinet Office has maintained its cautiously optimistic assessment of the economy while warning of downside risks stemming from US trade policies, particularly those affecting the auto industry. In its monthly report, the Cabinet reiterated that Japan's economy is recovering at a moderate pace and stressed the need for continued vigilance over market developments. The only notable revision was to trade and services balance, which was upgraded to roughly balanced from in deficit. On prices, the Cabinet noted that food costs inflation slowed and said it will closely monitor whether this moderation continues. And moving on to South America, Colombia's Commerce Ministry has announced it will impose a 30% tariff on 20 products from Ecuador, following a similar move by Ecuador over alleged Colombian inaction on drug trafficking. The Colombian government has rejected Ecuador's claims, framing the tariff as a reciprocal measure in an escalating trade dispute between the neighboring countries. European Central Bank President Christine Lagarde has stated that the world economy is facing new risks despite some forecasts for global economic performances, especially in the Eurozone being stronger than expected. Lagarde noted that geopolitics, artificial intelligence, AI, and climate change all pose significant risks to the global economy.
And I think the third dimension that we should not forget is the threat of climate change that we still have, and that has been a little bit on the back burner recently, but which is pursuing its course and requires that we finance the transition in order to reduce the impact of climate change. In the back of all that, you have security concerns, whether they are military security issues, cyber security issues, which are rising to the fore on all fronts.
German Chancellor Friedrich Merz has expected that the Mercosur trade agreement will be implemented provisionally, despite EU lawmakers voting a day earlier to challenge the pact in the bloc's top court, a move that could delay the deal by up to 2 years or derail it altogether. Speaking at the World Economic Forum, Merz said he deeply regretted the decision. He added that the European Parliament had placed another obstacle in the way, but insisted the process would not be stopped.
Another obstacle in our way yesterday, but rest assured, we will not be stopped.
World Economic Forum, the WEF President Burg Brand has stated at the Davos annual meeting that China's commitment to an open economy is helping rebuild global trust and boost international economic cooperation. Brand highlighted China's leadership in multilateralism amid rising protectionism and credited its openness with driving domestic innovation and growth. He pointed to countries' advance in electric vehicles, high-speed rail, and AI startups as examples of how economic openness has fostered investment and technological progress. Rebecca Greenspan, Secretary General of the UNCTAD, has said that rising uncertainty, not a single policy shock, is the biggest challenge for the global economy in 2026. Speaking at the World Economic Forum in Davos, she stressed that predictability is crucial for trade and investment despite challenges like US tariffs and geopolitical tensions. Greenspan highlighted China's growth and multilateral initiatives such as support for developing countries, zero tariff policies, and contributions to UNCTAD as key stabilization forces. She described China as a vital partner in promoting a multipolar world and helping vulnerable countries navigate global economic uncertainty.
Of multipolarity with multilateralism, of cooperation and solidarity between the countries.
President Donald Trump has warned that the United States would respond with big retaliation if European countries sell U.S. assets in response to his tariff threats linked to Greenland. He said the U.S. has all the cards, though he did not specifically specify what actions Washington might take. Trump's comments came amid concerns that Europe could retaliate against U.S. pressure over Greenland by selling large holdings of American stocks and bonds, a move that could rattle global financial markets. While Trump has since abandoned plans to raise tariffs on goods from 8 European nations, the episode has heightened investor sensitivity to policy volatility and geopolitical risks surrounding U.S. assets.
The greatest golden dome ever built. We're building a golden dome that's going to, just by its very nature.
But for further analysis, we're joined from Beirut by Professor of International Economics of the Lebanese University, Professor Jassim Ajaka. Good evening to you, sir, and welcome to Qnews. And let me start by asking, how credible is President Trump's claim that the U.S. has all cards in hands to threaten big retaliation against European asset sales, and what specific U.S. actions might unsettle global markets?
First of all, good evening, and thanks for having me. As you mentioned, in fact, we are currently in high stakes moments for transatlantic relationship between US and the European Union. Of course, we had let's say a peak in friction peaked this week at the World Economic Forum in Davos. And the warnings, in fact, let's say, threatened 8 European countries to increase the tariffs from 10 to 25% if they did not support the bid to purchase Greenland from Denmark. Also, you have the some European entities, like, for example, the academic maker pension, which is in fact a Danish pension fund. They signaled the fact that they want to exit all the U.S. assets, and this, of course, we saw on the social media and even in the financial markets a slogan or trend talking about sell America. Of course, the counter threat of Donald Trump is really, in fact, to say that we will apply, in fact, a massive retaliation against if we see that there is a systemic actions from the European entities to destabilize the dollar or the U.S. bond markets. Of course, let me tell you before anything that three main sectors that are really, in fact, impacted by the warnings of Donald Trump's. First of all, in fact, we know that the automotive sector, it's really vulnerable to such tariffs, and mainly if we take the case of Germany, BMW, Mercedes-Benz, and Volkswagen. According to some estimation, in fact, we are speaking about if there is an increase of 10% of the tariff, we are in fact speaking about loss something like $8 billion. And if we reach the 25%, we may reach losses something like 26%. Excuse me, 26 billion euros. In reality, the second thing, it's in fact the disruption in the supply chain. And this is in fact will be very hard for the European car makers. That's why we saw already some car makers like Volvo, they moved their plants to US, or at least a part of it to US, to avoid such things. The second sector, it's in fact the tech and the digital sector. Really, in fact, here it's maybe every or all, let's say, all the US components that they are used in the industry, in the European industry, will be impacted, in fact. And this, in fact, will be very expensive for the European unions, and this will impact really the European economy. The last sector, and this is what you talked about during the introduction, is the financial sector. Here, we can say that there is an invisible impact related to this. Of course, they will increase let's say, there will be a difficulty to have US dollars, in fact, to satisfy the operations, the transatlantic operations. Also, any research and developments that requires money, this in fact will be hard, will be more expensive, and in this case, they will kill any future growth at this level, or at least it will reach a certain level and stop there. And the last thing, and this is in fact is very important, is the currency by itself. If the US is hard to have for the European entities, in this case, any import from the US will cost really more for these entities. And in this case, of course, we are talking about the losses for the European companies.
Right.
I think that he is serious when we saw that he is serious. In fact, the last actions or the last events that we witnessed the last month, I think that he is serious and he can put in execution his threats against the European Union. But the agreement of today between the NATO leader and Donald Trump, maybe it constitutes something like a slow of this confrontation between EU and US.
With Europe holding 8 to 12 trillion dollars or euros in US stocks and bonds, what market disruptions could arise if retaliatory sales occur in response to Greenland-linked tariffs?
Excuse me, but let's ask ourselves another question. I mean, it's an answer for this question in somehow. If they, in fact, if the European companies, or at least even at the official level, they took the decision to withdraw from the US market, they will lose, in fact, lots. In fact, where they will invest this money. I mean, in which markets? They will invest it in Russia. Russia is under sanctions. In China, China is the big competitor for the European Union. Where in Brazil, in South America, where they will put this money. I mean, there is no possibility, at least at the short term, to move really from the US market.
Yes, but even if some countries are under sanctions, as you said, respectively here, that would be a kind of compensation to those sanctions, and it would be opening new markets, wouldn't it?
I don't agree completely. Why? Because if you want, the world is divided to two big parts. The first part is the consumption part, and it's constituted from the US market and the European market. And the second part, it's constituted from the big producers. We are speaking about China, about all the other countries. I don't think that they are able to find an alternative for the US market. And even though you have inside the European Union, you have something. In fact, they are attached to the let's say Western culture. Even if Donald Trump today, he is not really, in fact, let's say nice with Europe, but globally, in fact, they are Western oriented, and I don't believe that this will change really that. But listen to me. Today, the confrontation is not really between two economies. The confrontation today is between two political systems. The first one is I don't know if I can say this, but it's the far right represented by Donald Trump and the left represented by the European Commission and the European leaders. This is, in fact, the true confrontation today. I don't know why we have created something like the Greenland issue, this big issue, but the reality is that US is already there, and it has a military presence. It has control. There is, in fact, an agreement dated from 1941 between the Denmark and the US. They give them the full movement over Greenland. So I think, as I told you, it's more, in fact, a confrontation between two political systems more than anything else. And today we know that Donald Trump is putting America first as a slogan, and he is acting on this. I mean, all what he is doing, in fact, is related to this slogan.
Right. From Beirut, that was Professor of International Economics at the Lebanese University, Mr. Jassim Ajaqa. Thank you so much for your insights here. And back to our economic bulletin, and U.S. Trade Representative Jimmy Greer said it remains unclear whether the United States and China will reach a broad trade agreement, with Washington instead focused on managing the relationship through a series of smaller deals. Greer said the U.S. continues to closely monitor trade from China and noted that sales of U.S. agricultural products to China are moving in the right direction. JP Morgan Chase CEO Jamie Dimon has stated that a proposed 10% cap on credit card interest rates by the Trump administration would be an economic disaster, though he added that the bank could survive the impact. Speaking at the World Economic Forum in Davos, Dimon warned the cap could remove credit access for 80% of Americans who rely on it as backup funding. President Trump proposed the cap earlier this month, but offered no details on implementation. Analysts say such a move would require legislation and faces slim chances of approval. Banking industry groups have also criticized the plan, saying it could limit everyday consumers' access to credit.
They're not completely independent, just so you know. There's two parts of the
The U.S. Commerce Department has reported that the U.S. Economy grew slightly faster than previously estimated in the third quarter, with gross domestic product expanding at a 4.4% annualized rate. The revised figures up from 4.3% marks the fastest growth since the third quarter of 2023 and exceeds economists' expectations for no change. Growth in the second quarter was 3.8%. The upgrade reflected stronger exports and business investment, while consumer spending, accounting for more than two-thirds of economic activity, rose at 3.5% rate. A measure of underlying domestic demand grew at a 2.9% pace, slightly lower than earlier estimates. The Commerce Department has also reported that U.S. consumer spending rose 0.5% in October and November, keeping the economy on track for continued growth. Higher income households are driving spending, while tariffs and rising prices weigh on lower and middle income consumers, creating a K-shaped recovery. Inflation eased slightly, with the personal consumption expenditures price index up 0.2% in November and core PCE rising 2.8% year-on-year. The Federal Reserve is expected to keep interest rates steady, with December PCE data due February 20th. In North America, contracts to buy previously owned U.S. home fell unexpectedly in December, hitting a 5-month low as labor market concerns and a shortage of entry-level homes offset lower mortgage rates. The National Association for Realtors said the pending home sales index dropped 9.3% to 71.8, the lowest since July, and fell in all 4 regions. Sales were also down 3% from a year earlier. NAR chief economist Lawrence Yun said low inventory, around 1.18 million homes, the lowest of 2025, dampens buyer enthusiasm. Many homeowners are holding onto low mortgage rates, while slowing price growth limits listings. The Labor Department has reported that the number of Americans filing new applications for unemployment benefits increased less than expected last week, suggesting the labor market maintained a steady pace of job growth in January. Initial claims for state unemployment benefits rose 1,000 to seasonally adjusted 200,000 for the week ended January 17th. The number of people receiving unemployment benefits after an initial week of aid, a proxy of hiring, fell 26,000 to a seasonally adjusted 1,849 million during the week ended January 10th. The International Energy Agency has stated that the global oil market will face a deep surplus in the first quarter of 2026 in its monthly oil report. The IEA projected supply to exceed demand by 4.25 million barrels per day in the first quarter, with an annual surplus of 3.69 million BPD, slightly below last month's forecast of 3.84 billion BPD. The agency revised up its demand growth forecast by 70,000 BPD to 930,000 BPD, citing economic normalization after last year's tariff disruptions and lower oil prices. On the supply side, the IEA raised its global growth forecast to 2.5 million BPD from 2.4 million, with roughly 52% of growth expected outside OPEC+. Oil prices fell on Thursday, revising the previous session's gains after U.S. President Donald Trump softened threats against Greenland and Iran, and as investors assessed the supply and demand outlook. Brent crude was down 1.92% at $63.99 a barrel, West Texas Intermediate for March declined 2.05% to $59.38 a barrel. The contracts climbed more than 0.4% on Wednesday, following a rise of 1.5% a day earlier. Goldman Sachs has raised its end 2026 gold price forecast to $5,400 per ounce from $4,900, citing continued diversification into gold by the private sector and emerging market central banks. The bank assumes private sector buyers will not liquidate their holdings in 2026, effectively raising the starting point for its forecasts. Goldman also expects central bank purchases to average 60 tons in 2026 as emerging markets continue diversifying their reverse into golds. Gold prices fell on Thursday as risk appetite improved after U.S. President Donald Trump backed off from threats to Greenland-related tariffs, with profits booking in the wake of recent gains adding pressure. Spot gold slipped 0.4% to $4,819.39 per ounce after falling nearly 1% earlier in the session. U.S. gold futures for February delivered lost 0.3% to $4,821 per ounce. Elsewhere, spot silver was up 0.2% at $93.47 an ounce after hitting a record high of $95.87 on Tuesday. That's all for today's Economic News Roundup. Many thanks for joining us, and stay informed, stay ahead, and join us again tomorrow for the latest updates. Don't forget to follow Q News on YouTube, Facebook, X, Instagram, and TikTok at Q News EGY to stay informed. Many thanks for watching.